Welcome to this stock analysis blitz for BAE Systems. Please remember this is for entertainment purposes only. BAE Systems are the world's seventh largest defense company. They're actually the largest non-US defense firm and the 12th largest stock on the FTSE. And they're currently paying out a 1.8% dividend yield. As we can see, following the invasion of Ukraine by Russia, BAE Systems have seen a large uptick in both order backlog and order intake. In this pie chart, we see their revenue by business segment. 26% of their revenues are in the air business segment. Most notably, this includes the F-35 Lightning. Although there's a danger that some European countries may start ditching their orders for the F-35 following a bit of a lack of trust and reputation in the US, when I checked, actually there's still over 1,500 units yet to be delivered just to the United States. So despite what's going to be going on in Europe, the majority of the sales are to the US. And so this is obviously a very valuable platform for BAE Systems. They only actually produce some of the airframe and some of the electronics, but all the same, this is great to have in their portfolio. This business segment also includes the Eurofighter Typhoon, and this aircraft's had a bit of a renaissance of late, and we see that there's quite a few new orders coming in. So between them, the F-35 and Eurofighter Typhoon promise to bring in quite some good revenues for this company. When we look at the operating profit by business segment, we see that the air segment is the strongest and has a nice trend, and it makes sense for that to continue for quite some while, given that their main products, the F-35 and Eurofighter Typhoon. And then by the time these start to come to an end, BAE Systems are a third of the partnership that's going to be producing the Tempest. The Tempest is the proposed sixth generation fighter. There's a partnership between Japan, Italy, and the UK, and it really does make sense that this should produce some good revenues for BAE Systems at about the right time when we start seeing the money drying up from the Eurofighter Typhoon and the F-35. So the air business segment is looking in great shape for BAE Systems. Then there's the maritime business segment. This includes the Astute class nuclear submarine. So this is actually number 7 of 7 Astute class submarines that are being built, and they've just started to build one of 4 Dreadnought class nuclear submarines, and these are actually the strategic ballistic missile submarines that are going to be replacing the Vanguard class that have been carrying our Trident system for many years. So that's a great stack up of money making shipbuilding activity for BAE Systems. And then later on down the pipeline, we have the SSN AUKUS submarine. The Royal Navy's ordered 7 of these, plus there's 5 going to be built for Australia. And these will actually be the replacement for the Astute class submarines. Looking at the split by business segment for operating profit, and the maritime there, the cyan line, is a very good trend. And obviously, we expect that to continue given this beautiful portfolio we have here of ongoing projects. So far, quite good because about half of their revenues are in business segments that are looking really good. Then moving on to electronic systems. And unlike the previous 2 business segments, in this one, it's kind of fairly difficult to pass out what the main projects are and with an understanding of what kind of contribution they make to then try and work out moving forward how well we're doing here. We do have like a breakdown here with electronic combat solutions being 23% and space and mission systems 20%. But the problem is there's just such a large number of different products overall to try and read into this much. That's kind of out of the scope of this fairly quick blitz analysis I'm doing today. So for the electronic systems, it's hard to really delve in there very much. Nevertheless, the operating profit for this segment's kind of flat, and we have to accept that about a quarter of their revenues here, it's hard for us to really read into that business segment given the limited scope of this video. For platforms and services, I was surprised to see that BAE Systems own the manufacturing of the Bradley infantry fighting vehicle. This is the Americans' main infantry fighting vehicle. They're actually now looking to replace it, but there's probably quite a lot of work in kind of maintenance and doing upgrades for this, with the possibility of export sales to other countries. But all the same, this is a very well regarded piece of equipment, and so it's good that BAE Systems own all the know-how and manufacturing capability, etc., surrounding that. Now, BAE Systems also owned this US Army bit of kit, which is the Armoured Multi-Purpose Vehicle. This is only just started production in the last couple of years, and actually there's going to be nearly 3,000 of them to be built. So this is obviously a very sizable project for BAE Systems to be involved with. The AMPV is actually a relatively kind of cheap and simple idea. All they've done is taken the chassis from a Bradley and taken the turret off to create this very practical armored vehicle that's used for things like medevac, command vehicles, and mortar support vehicles, and also the CV-90 infantry fighting vehicle. Now, this particular IFV has proved to be very effective in Ukraine, from what I understand. And as we can see from Wikipedia, there's actually a whole load of orders still coming in for this, plus actually quite a few potential operators in the pipeline. Apparently, Ukraine plan to buy 1,000 of them, which presumably would be a manufacturing program that would be going on the next few years. Also within the platform and services division are two ammunition plants. So this business segment has actually quite a impressive suite of different products that they're selling, and we can kind of anticipate demand for them because the war in Ukraine has shown, although drones are very important and maybe tanks are looking a bit obsolete, you still need these armored vehicles to transport the troops around. And we frequently have seen them used when attacking enemy trench formations and things. So Europe will probably need to acquire a lot more of these kind of units if they are to build a credible defence force in the next decade. So looking at the operating profit and the platform and services, which is the green line here, again, a very good trend. And finally, there's cyber and intel. They have a US-based intelligence and security business, as well as a UK-based digital intelligence business, and they actually provide cybersecurity for the government. And this is 9% of their revenues, with the operating profit trend looking fairly reasonable. So overall, it has to be said that the majority of the business segments which BAE Systems operate, they've actually got a very good suite of products, and they're all looking very promising, seem to be doing very well, at least qualitatively. In terms of revenue, and half their revenue is to the US, with about 27% in the UK, and Saudi Arabia standing out with 11%. It just seemed quite credible that with the EU obviously increasing its military spending, maybe BAE Systems could help accommodate some of that. Looking at their net income history, it looks fairly robust, but maybe they're starting to look a little bit pricey with a price to earnings of 27. Eyeballing their balance sheet, and there seems to be a lot of churn here. Their short-term assets and short-term expenditure kind of balance out and seem to be quite large numbers when sided up against their market cap even. This, though, is fairly typical for a defence stock. When I look at the current assets, it's the things you'd expect it to be. Of its trade receivables at 7 billion, with inventories accounting for about 1 billion. And they also have quite a lot of cash and equivalents, stacking up to about 3 billion. In terms of short-term liabilities, it's mostly trade payables and contract liabilities. So kind of fairly typical. The situation really for a lot of defence stocks and definitely BAE Systems is they're kind of like a monopoly because their main customer is the UK government. When it comes to these massive long-term projects like building a load of submarines and things like this, these are massive projects, but the actual cost of producing these products is very high. There's a lot of design cost built into the final cost, and all of the STEM scientists required to engineer these products also have high wages. So this is why there's a large swill here. There's a lot of money coming in, but there's a lot of money coming out as well. From the seemingly massive revenues, they skim a kind of small fraction of that, but overall that's actually turned into a hefty profit of over 2 billion a year. We see a nice trend in their revenue increasing, but of course the operating costs increasing with it. And when I look into their annual report, I see that actually practically half of their operating costs are actually staff costs, i.e. wages, and the other half are what they call inventories recognized as an expense. So that confirms actually what I just said. So this is why you get a kind of low margin. The actual return on sales is about 10%. So that's, I guess you could say that's a kind of low margin where they're skimming away these ultimately large net incomes, but there's a lot of churn when you're looking at what's coming in and out within a particular year. So when I look at the net income history, I like to see a widening become between income and expenditure. And we don't really see that too impressively with BAE Systems, I have to admit. So there is an increase in net income, but it's a little bit pedestrian, especially when you consider how much the actual revenues have gone up by. So looking at their long-term assets, and actually and actually half of them are goodwill, and in fact the goodwill at 13 billion exceeds even the net assets. So I took a look at goodwill in the annual report, and actually what I read here wasn't too pleasing. So I double checked with Grok, and Grok actually confirmed that basically, as through time, a company like BAE Systems has took over other companies. When they buy them out, they actually pay more for them than the companies are worth. But they do that on the basis that the premium that they're paying, they think's worth it because they look at things like branding and potential for future new deals in the future. So this goodwill, which you only find in defense companies that have been going around snapping up other defense companies, it is a intangible asset, and for me it's a kind of low quality asset. I don't really regard goodwill, and I wouldn't really include it in one of my valuations because I tend to be extremely kind of ruthless when I do valuationing. This means that because of this kind of dodgy goodwill component, I wouldn't be actually including the net assets in any kind of valuation of them, because so much of it is this dodgy goodwill. All the other stuff is kind of reasonable stuff, but my takeaway here for valuing BAE Systems is that really it's all about their order backlog and their order intake. Something else to point out is the retirement surplus. And then when we go to long-term liabilities, they have pension liabilities. Now, overall, they have a net pension surplus. But then when I looked at the small print in their annual report, a lot of their employees are actually on these legacy employees where they used to give away defined benefit schemes. And these are from some of the antiquated companies that BAE Systems bought out back in the day. One of them, for example, being the Royal Ordnance Pension Scheme. So you have these old companies that were taken over, and they had loads of staff that were on these defined benefit pension schemes. And as you can see, you can have 50 or 70% of the people on these schemes, they're actually a retired pensioner now, but but BAE Systems still have to pay them, even though they don't work for them anymore. So we see here that overall there is a pension surplus. So obviously, with the stock markets having done great the last few years, you can see as the stocks have always gone up, thanks to the Fed put, the surplus has done amazing. Whilst the amount that they've got to dole out to people is about 21 billion, the assets are currently worth 22 billion. So this is all very good now. But if there was, for example, a massive financial meltdown, and let's say bonds and stocks both went down bad, and you lost half of the value, let's say, they've still got to pay all these pensioners this money. So you could end up with something like a £10 billion write down. So the legacy pensions are definitely a potential hidden ticking time bomb. I've noted that apparently the UK ones, which obviously are the worst ones, they only have to be updated every 3 years. So if there was a massive crash, you've got like a couple of years before those be updated, and then any changes would have to be recognised in the balance sheet. But it's still definitely something worth knowing about. And it's like, it could be like a 10 billion poison pill, or certainly like a 5 billion poison pill that I don't think most people who follow BAE Systems even know about. In terms of their long-term liabilities, it really is noticeable that they now have 8 billion of debt. In fact, they only had 4 billion, and they doubled it because they bought Ball Aerospace for 4.4 billion last year. So here I've got my kind of valuation tool. Yeah, and it's obviously impressive seeing how the revenue's gone up. The net income perhaps hasn't gone up so impressively. And we see, though, the market cap, though, has gone up a lot more. I've got here in this black line a very kind of rough metric that I cobbled together, which is the order book plus 4 times the net income. And this gives me a kind of rough valuation metric that's easy to understand to compare against the market cap. And we can see a bit of a crappy trend now. You kind of want to be investing in something when you're down here, not when the market cap is kind of running away from your key metric. I started to try and do a valuation model, a kind of crude one that was done in terms that I could really understand. I won't go into detail because, frankly, I need to do a lot more work to really be sure about what I'm doing there, and then I'll perhaps can do that in an update video. But I can tell you that I got 3 completely different valuations depending on who I asked. So Grok had a 34 billion, Alpha Spread a 51 billion, and Simply Wall Street a 68 billion. My number was kind of in the middle to low of that. This was like the middle of the analyst valuations, and they would have, at the current stock price, this stock looking kind of a little bit undervalued with perhaps another 30% to go. My valuation, because of the issue I have with their goodwill, and then how that makes them kind of net zero in terms of net assets, I wouldn't be stacking this on top of the net assets. I'd be starting it at the bottom here. And so I would actually have them at, perhaps you could say, about the right price, or perhaps slightly overvalued at the moment. But of course, speak to your financial advisor. Don't be going off my crude calculations here, which I'd say is still under development. It is kind of useful, though, to take a look at what the experts are saying. I don't understand why the experts are giving wildly different valuations, but still, it's good to take a look at that and do your own kind of crude thing, like I have, for a kind of ballpark figure, what you think they're worth. And really, they kind of look fairly priced based on that. When I look at the actual share price action, for me, there's actually a clear technical trend here where BAE Systems seem to be in a megaphone formation, which would mean that really you'd want to wait for them to drop back down to the bottom of the megaphone before buying again. However, having said that, there's signs that have actually broken over above the top line of this formation. So that would suggest actually things being very bullish from here. I know from past experience that it always seems to be a terrible idea to go and buy something after it's gone up by a lot of value over many years. Myself, I'm kind of really frustrated about the defense stocks because back in 2022, investing in defense stocks after Russia invaded Ukraine seems to be like the most obvious trade of the century. And so I'm kind of a bit gutted I missed out on that. When it happened, I was thinking, oh, I'm too late because it had gone up by a third quite quickly. But since then, BAE Systems has actually gone up by 143%. Following Trump's abandonment of the EU and the EU announcing that they were going to increase military spending, I kind of feel like I want to invest in some defense stocks, but my plan is to only invest about 7% of my portfolio. So actually kind of a fairly small position, just so it stops annoying me seeing the price race away. But in terms of BAE Systems, I'm going to wait to hopefully get the bottom of this megaphone. But if we go screaming up, I'll probably find myself diving in based on what the technical chart shows me here, and I'm sure probably regretting it. So that completes my video on BAE Systems. So I hope you found it useful, and I'll speak to you at the next video. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.